begin by understanding how the markets opened for the day's trade. We have Kush Bohra, founder kushbohra.com, joining us this morning as well. But there you go on your screens. Nifty, Sensex, Kartik, this week has been all about flattish openings and flattish closings. Markets moving in a very narrow range, mainly because there are not too many news triggers that are pushing the broader markets. How have the markets been this morning?
Not too good, Krishna. In fact, what we've seen over the last week, in fact, for a very long time, we've seen a very, very marginal upside in the markets, a marginal green, hints of green in the markets on a daily basis, but today seems to be an exception. In fact, we are starting with broader markets, both Nifty and Sensex down about 0.23, 0.24% or so, quarter of a percentage point. Not great news. I think this is largely stemming, from the increase in oil prices that we are seeing, the anticipation of OPEC looking at cutting voluntarily crude production. We are looking at a direct impact on the rupee, nearing its almost lifetime lows right now at about 83.15 rupees or so to a dollar. So markets seem to be taking that a little bit on the chin this morning, but the upside continues to come from the mid caps. The Nifty mid-cap is up about half a percentage point this morning. I think on back of that and other global cues, even the IT stocks are taking a bit of a beating. I think the decline in rupee should usually augur well, because that makes your exports a little more profitable when you convert them back to INR.
Right.
But broadly, that's what we are seeing this morning.
Right. So also, the good thing to notice from that chart is that whatever happens, there's still some space for uptick in mid-cap stocks and small-cap stocks. They're continuing to have that space to grow, and you're seeing the green uptick over there. But then Nifty, Sensex, not too much of movement. We have Kush Bohra, incidentally, Kartik, joining us in the broadcast. Kush, very good morning. Thank you so much for taking time out, as always, being with us. Markets, tell us, Kush, from Monday to Wednesday, flattish opening, flattish closing, in the red, in the green, barely, not too much movement. But this morning, not the cues, decidedly not very good, mainly because of the way oil prices are going.
Good morning, guys. What fab energy this is, and I'm so glad to be here again. Let me try and shift the perspective a little. As Kartik was just saying, oil prices high, rupee hit a low. Despite that, we've been in the positive, even though marginally. And from technical perspective, if I could just somehow show you my charts and my graphs, what is encouraging is that, the Nifty was trading for the last, month or so, the good part of a month or so, in that narrow range of 300 points, 19,550 to 19,250. We tested 19,250 at least 3 to 4 times, and then we rebounded from there. But now, more encouragingly, 19,500 and 550 is the zone that we've been able to cross. Yesterday, we closed above that, even day before yesterday, even though marginally, but, we closed above that. So for me, even this marginal uptick, in the scheme of things, in the a grand scheme of things, is actually quite positive. Now I see red on the screen today on the Nifty, at least down by 25 points. But I won't read too much into this, and I'll give you a very simple reason why. Today is the weekly contracts expiry on the Nifty.
Okay.
We know the Bank Nifty expiry shifted to Wednesday, so that happened yesterday, and hence there was some pressure on Bank Nifty. Today, similar story playing out on the Nifty. We've got the weekly expiry, but if you see the options contracts, if you see the setup, the base at around 19,500, 19,400 from the put side is so significant. It's actually much higher than the call base. So that is suggesting that the supports are now getting in place. Once the expiry hangover is out of the picture, Friday come Monday, we'll probably see, even if a gradual, but an uptick, in the indices all over again. This is a very encouraging setup, and whatever we've seen the last, 2-3 days, however marginal, has been positive.
All right. Before we go any further, I just want to quickly check the mid-cap stocks. You're seeing this morning too, even in a sea of red, mid-cap index is up. Does that mean that mid-cap stocks are not really overvalued at this stage? There's still so much value to be found?
Well, there are certainly pockets where you see overstretching, and something that we see in the technical space called the RSI negative divergence, where the stocks actually run up, but the strength is not the same. Now there are these pockets that we are seeing, but this is for sure a stock pickers market, because if one sector doesn't perform, the other one sort of starts moving. It's the time for the specialty chemical sector to sort of perform now. So there are leadership changes and there are sector rotations that we are seeing. I wouldn't rule out, a brief dip in the mid-cap space, just given the fact that, the kind of run-up that we've seen. The index itself is at RSI of 85 on the daily charts, which is suggesting that it's already into an overbought territory. So
Okay.
while I will be a little cautious, I'll be cautiously optimistic here.
Okay, cautiously optimistic on mid-cap stocks. Good message going out to all those watching this. Yes, sure, there's value, but be cautiously optimistic. You're talking about, Kartik was talking about the markets, the broader markets, and the way they've been and the way they've been running, the global triggers affecting markets. You're talking about once the triple witching day hangover is done with, you will have from Monday onwards, recovery in the broader markets. But then again, there is another cue we're waiting for, and that is the US FOMC meet, the US Fed. Less than 10 days from now, we'll know whether they're hiking rates or they're holding rates. I'm sure the markets has factored in that already.
Most certainly. In fact, I think the fact that we've not moved up by a drastic amount is perhaps the fact that the inflation data and the jobs data and the employment data and the agriculture data and the all kinds of multiple data that are coming out from US are so confusing. When we write our reports, one morning we're saying that the data is suggesting a hike, the next morning we're writing it suggesting a pause. So it's very confusing, and hence you want that hangover to get out of the way more than anything else. And hence we've seen the Indian markets sort of run up, but not by much. So I think once that hangover is done, we'll probably, for the next couple of months, at least till the next FOMC meet, we'll probably have somewhat of a clear run.
Kush,
so,
how many hangovers?
I'll probably have my eyes. Sure.
Kush, you have a triple witching day hangover that's affecting broader markets today, and then of course the US Fed rate hike hangover as well. We'll have to wait for all these hangovers to end to really see where Indian markets, find their levels post that. Kush, stay with us. Kartik, I want to check with you. One of the biggest news triggers this morning, apart from all of this, is the Foxconn story. We will get to that, but before that, talk to us about the stocks in action this morning that you've sort of picked up upon.
So, Krishna, I think a lot of news coming in. Of course, one stock in focus or one group in focus for me today happens to be the Tata Group, and within Tata Group, it is the left side, the left hand taking out something from the left pocket, putting it in the right pocket. So we are seeing this $1 billion 5-year spanning deal between Tata Motors owned JLR and Tata Consultancy Services TCS. And it's a $1 billion deal to span over 5 years, where TCS now backs this contract to make JLR, the UK-based subsidiary of Tata Motors, more agile, transformative, more driven on data protection, more driven on cyber security, and overall just transforming, reforming the long old organization and giving it the wings of agility using technology. So this is one trigger this morning for me. In addition to this, of course, we've also got a lot of action pretty much on a daily basis on Reliance.
Of course.
And just when you think that, okay, the Geo Finance story, yeah, we've overdone it, we've spoken too much about it, and yet we don't know where that is headed. There are these new surprises every morning, and in fact, they have stopped being surprises. Every morning you wake up to some news on Reliance Retail. So this morning, news suggesting that Reliance Retail is picking up 51% stake, undisclosed amount yet, from Alia Bhatt on her child wear startup called Edamame. And this 51% stake comes again with another parallel news coming on QIA, Qatar Investment Authority, investing $1 billion more in Reliance Retail to pick up 1% stake, taking Reliance Retail to a valuation of $100 billion.
Okay, we'll take a short
You
breath.
remember how
We will
much-
take a breath. Kush. I just want to bounce this off, Kush. The question with Reliance, two questions, even when they had their AGM, two questions. When are you going to list Reliance Retail? When are you going to list Reliance Telecom? It's telecom business. The retail business, with the latest fund infusion of $1 billion by Qatar Investment Authority, values it at $100 billion. There is still another
Krishna, just to put it in perspective, WhatsApp was bought by Facebook for $21 billion.
Oh, goodness.
Flipkart was bought by Walmart for $17 billion. We are talking about a company, a subsidiary, yet to be de-merged, 5 times that value.
Kush, what is your thoughts on the listing of Reliance Retail? We still don't know what's going to happen.
De-merger, listing, when? I think there's a lot of value to be unlocked there.
true. And if I can say so, did I tell you or did I tell you, right? The last time around I was here, I was saying Reliance is a screaming buy for me, not from a momentum, not from a near-term perspective, but if you're looking at anywhere from 6 to 12 months time, time horizon, Reliance at these levels is a buy. Now we don't know when the listing will happen, but the fact that the kind of news flow that we are seeing is extremely encouraging. And I was recently just today morning, reading a news article about the premiumization of Indian economy. So while they are not, buying just the retail, segment. The masses segment of it, they're also investing heavily in the classes segment of it, and that is also something that is adding to the $100 billion valuation. So overall, as long as as and when the listing happens, till then the Reliance stock itself is a screaming buy, at least from a 6 to 12 month perspective.
But Kush, a slight dip in Reliance today. Is this, down about 0.3% or
Profit
so?
booking time?
Profit booking, or it's the right dip to buy. But again, what is driving this this downside this morning? Is it again rising oil prices? Because let's not forget, Reliance is also, among many other things, Reliance is also one of the largest oil processors in the country.
30% of the output of the country belongs to Reliance, for God's sakes.
No, absolutely. See, the fact that, these triggers are there, but there isn't a clarity, that's the only thing that's keeping the stock under pressure. I mean, the day we have an announcement on the days, the dates of, listing of some of these entities, is when we'll probably see, that actual unlocking happening and the stock running out. So the hangover, again, probably we've overused that word today already, but as long as, that hangover remains, the stock will remain under a bit of a pressure. And hence I suggest that, from a near-term perspective, till we get that kind of clarity, the stock might not be a trader's favorite counter, but the kind of support that the stock's taken at around 2350, 2400 kind of zones, this does seem like the profit booking correction. The round is over. Accumulation seems to be to have begun from here, and hence this is a good buy. The stock's already down from what 2600, 2650 odd levels. So yeah, this is a good time to enter from a long-term perspective.
All right, then some serious advice on the Reliance stock coming in. Stay with us because I was looking at the stocks in action that you had put up, Kartik, immediately after this big stocks, Tata's. Both stocks are up incidentally after when you take money from one pocket to put another. Both Tata stocks are up, but unfortunately Reliance is not for different reasons, obviously. Then I saw these gaming stocks. You have especially Nazara Technology. Talk to us. That's another stocks in action. This Nazara Tech as well. What is going on?
So Krishna, I think the gaming stocks have been volatile for a while, and that volatility, in fact, it had seen a massive downside and then a great recovery. If you remember, obviously you would remember that this GST clarification that came by way of levying a 28% tax on the face value of every transaction on gaming platforms, that led to a massive bloodbath on gaming stocks, Nazara and Zensar and many other stocks in particular. Now, what really happened thereafter was this buying opportunity that Zerodha brothers, Nitin and Nikhil Kamath saw and pledged to invest about 100 crore rupees or so in Nazara Tech. But what I'm reading this morning is that the Supreme Court has actually taken notice of a long-standing Karnataka High Court cleared case where the GST network had actually, and the finance ministry had actually imposed a 21,000 crore rupee tax notice on an unlisted company called Gamecraft. By then, and I think I'm talking about 2021, 2022 nearabouts, and at that time, GST evasion of 21,000 crores was suggested, and that was the kind of recovery being made again on this whole issue of 18% or 28% face value or platform fee, etc. And Karnataka High Court back then had quashed this penalty by the GST authorities, saying that Gamecraft is in no way responsible for paying this 21,000 crore rupees. Today, unfortunately, the news emerging is that the Supreme Court is saying that the Karnataka High Court order cannot be taken as a precedent for other courts to follow. And it looks like those books are going to reopen, and there could be this tax imposition back on Gamecraft. And that seems to be driving the entire gaming sector, down today. So Nazara Tech is down about 2.5% or so. Another gaming company, Zensar, incidentally, is up about 1.7%. So honestly, when I was looking at this data, I couldn't for the life of me tell what the real trigger is.
Maybe we can check with Kush on that. Kush,
Absolutely.
what is the real trigger? Huge news that Kartik is talking about, and gaming companies, online gaming companies have been in the dock ever since the GST regulation from the government came around, making it a sin tax on on risky earnings, so to speak. But what is happening with Zensar and Nazara this morning?
See, I wouldn't have, I wouldn't be surprised to probably see Nazara, probably rebound and, come up and trade in the positive, even by the end of the day or maybe in the coming weeks, actually. It's just that the stock has risen quite sharply. I mean, 700 odd levels, it was languishing and not too far back, about what, 15 days ago. And then, the news of, the Kamath brothers, probably pledging or even buying stake has sort of, given a boost to the stock. Now, from 700, you go to 900, approximately what, about 30% in 15 days. Not a bad return at all, right? And hence the profit booking session for the last 2 days. Otherwise, I don't see anything wrong, with the stock per se. So, once this fall stems, could be around, 840, 850 odd levels, is when I would look to re-enter, in a stock like Nazara, Technologies. Overall, the setup looks positive. Everything said and done, if you're implementing a syntax, which means there is a degree of stickiness, or there is a degree of adaptability that everyone is now making to these stocks and to these platforms. So I think these businesses are here to stay. Zensar again has actually consolidated and now giving a breakout. So I think the sector and the investors will wait for some more clarity on the Gamecraft news before it cements and comes into sort of any kind of a verdict. Till then, I think the stocks will run their course.
All right, that's the take from Kush on the gaming stocks. Quickly, we're moving to the other sector that's in focus as far as stocks in action this morning, and that's the pharma sector. And that's not a sector in focus this morning. It has been a sector, Kush, I'm sure you're smiling the moment I say pharma sector. This sector has been giving great returns in the recent past. Kartik, talk to us about what's happening with some of the stocks this morning.
So, Krishna, I think it's emerging now from news reports at least that Torrent Pharma seems to be a front runner in acquiring Cipla. And this again happens at a time when Cipla itself, which is up for sale, has invested in purchasing a South African pharma company right now, so sort of bloating its financials even more than what it is at. And in addition to Torrent Pharma, we had seen Dr. Reddy's and Bain Capital also being among the front runners. But it seems now that there is going to be some sort of a definitive idea on Torrent Pharma being the final sort of bidder to go ahead and acquire Cipla. But again, these are just reports right now, speculative in nature, and we really don't know which side that's going to be headed towards. So I think all pharma stocks right now, for some reason, we see that both Cipla and Torrent Pharma are in the red today, even though the deal seems fairly hot. And Dr. Reddy's, which does not seem to be the number 1 contender right now, is up about a percentage or so.
Okay, Kush, this Swayamvar for Cipla is going on. We don't know who is the one who will tie the knot. But if going by Kartik's own analysis, the fact that Dr. Reddy's might not be buying Cipla is pushing the stock up. Is that the way we can interpret it?
Well, I would love to have interpreted it in that fashion. It's just that the stock's actually not done much even after the news of takeover and the fact that there have been multiple contenders for this. 1275, 1230, 1300 was the zone where the stock had resisted previously. It's still there, which means the street's waiting for the kind of valuations that will be announced. It's probably going to be like a promoter to promoter deal. Not sure if there is going to be too much value left on the table, either side. Hence, you don't see that kind of a jump. Otherwise, a news like this should have pushed the stock, significantly higher, and we are not seeing that kind of a traction. So on Cipla, at least I'd like to wait. But yes, the reason for smile, was, on the pharma sector was, to corroborate something that Kartik said earlier, that, the indices don't seem to be moving anywhere. Now, if I were to, corroborate his point, the last couple of days when the indices have moved higher, the drivers have been the defensives, FMCG and pharma. So is this a play where, the indices are going higher on the back of defensives? Yes. But, is this something to be wary about? Not sure, because, we've already fallen about 3-4% and now rebounding. So I think, safely we're in a zone where, that the selling has probably, been done and dusted, and we'll probably see some upside. But yes, on the overall, view of it, pharma stocks seem to be doing well. And if I were to pick a sector, I would pick, the hospital space from here, the likes of Metropolis, Rainbow Children's Medicare, Narayan Hrudayalaya. These are the spaces that, are probably, quite clear, in terms of the, way forward. So yeah, these are the stocks that I'd have from the pharma space on my radar.
All right, that I knew that smile, because so many investors are smiling because they're invested in pharma stocks and they've been doing consistently well. But again, they've been hit by big news. We'll have to wait and watch, how much growth pharma stocks can get going forward, especially in a market like this where there are no big news triggers per se.